much memory on my laptop, and I didn't realize that. So I had to be very careful how I make the videos in terms of making sure that when I speak, it is recorded. The last video I made, I thought it didn't record, but I thought it didn't save, but it actually did save. So I guess I will just edit that video onto this one. Well, edit this one onto that one, and post that one as the 10.2. But I entered here on the second standard deviation because the confluences that we have and slash had is, well, the original the drawn liquidity, it was this high here, right? This could potentially be the high of the week, but we don't know because again we have FOMC later, hence the reason for this tight range. Honestly, I could expect today to be a tight range. You know, I would want to see price come back down to this swing low here, but I'll get into that. So we had the original draw here, so price traded up into it, right? This is the market structure at the moment is this high and this low, and right here should be about half, right? If could just take my tool here. You could do this with a fib as well, but again, in the last video I explained why I'd like to use the fib. Too much lines on the screen. So we over the 50%, so this considered expensive market. So you don't really want to be a buyer anything over here. And this line is as high as price could have come up to, right? And I will make a video explaining this other way of, I guess, fractal trading. I don't have a name for it, but this was something I was looking at when I had now started. But that's for our next video. I didn't enter pound because the video where I have that will be attached explain this entire price like here. I didn't enter it, but again, when that video is edited, it will be explained inside of there. I actually was looking for a short inside here too, but I think I'll just keep it with this one trade for just euro alone today and allow euro to go all the way to terminus, or at least take a partial. Because my plan is to, oh, let me stick to the explanation of entry. So we have the original draw. We have premium market. There's a 5-minute premium fair value gap. Trade up to one standard deviation, and a day where we already expecting lower prices. So that is the reason for the entry. The draw. This was one standard deviation here. Entry was after about 5 to 15 pips above the high that resist price. So we had a little bit of resistance here. We have about 5 pips in. Initially here would have been where I thought price would have traded up into, but we already at the time of the New York session open a half hour ago, and I started to see this resistance coming into the opening. So I was like, okay, the next big leg up, I would look to go short in. And I know this would have been a draw, because on the 50-minute chart, by the way, I know this would have been a draw for prices to come down, and here, equal lows. But the original draw looking at is this equal low here. Remember, we're already expecting lower prices for the week. So if we really do the full weekly range, we do the weekly range, we'll see how much of a premium we was in. You see how much of a premium we was in? This was just the range for today, including yesterday's price as low as it went today. You see why it's important to label the video coming where these trend lines for the opening price it coming. This was the low it went for the day, and this was the draw. So there's the range I was working with just for this fractal. But for the week, this is the low for the week all the way down here. So you see how much of a premium we were already in. So buying down here was never really advisable, So the original draw I'm looking at is 67.52. We have a gap in price here. I'm actually in this trade also with my funded, so I paying a lot of attention. I really want my funded to go to terminus too, so but again it's a FOMC day, and I had to play it smart. And I only took, if you could see up here, I didn't even enter the pound. I didn't enter the pound. Pound showing relative strength because we already traded down to the lower for the day I expect for pound with here, because this actually went 4 standard deviations down. I said I draw it in. Let me just do the run the fib. I actually did this already in the video earlier. Went a little beyond 4 because maybe Germany. We had CPI for pound, and that's why we had a big sell off at 2. So we went as far as 4 as the down for pound, but this is the real draw with the institutional higher time frame. Institutional flow of bearishness. So that's why I was more focused on taking this, but this was a good buy as well. Again, the explanation in the other video. So I have some editing to do later today that I would definitely have to get into. Alright, so we have a high, a low, a high. So this could be a breaker here. We also have a breaker here as well. It's a fair value gap and also a breaker. I didn't label it as a breaker, but already no, we already traded in a breaker here, and we have a water block and a premium fair value gap. So have a lot of things going on with this zone here. And if I do the same thing with the weekly range so far, Tuesday as the high. That is why I didn't sell yet, because we still in a reasonable discounted zone for pound at least. So even though they work together, they move together. Sometimes if pound have news, it obviously will go higher or lower, but generally they move in tandem. So that's the only reason why I didn't enter on the boat this time, because pound still fairly in a discounted zone. So we see, remember I talk about these candlesticks when they start doing this and price do go higher. This tends to act as a draw later on after the original higher time frame move happen. This tend to act as a draw for price they want to attack, because it look as reasonable support. So a lot of people might trail this stop up to these kind of levels. You see them better on the smaller time frame, but these levels tend to act as areas of temporary support for people who are already in price legs like this, who are fortunate enough to be in those things, who trail the protective stop. Typically it'd be under there. When you see candlesticks just like this, one long body, one long body, one long body, you tend to use that as a gauge for strength in a particular direction. But when it starts to break down like this here, yeah, that is when the I like to call it trend exhaustion starts coming to the market, and after it completes the original draw it was going for initially, it tend to come back down and liquidate these areas here. So if you look back on the higher time frame, the 4 hour, we have a lot of equal lows here. Wednesday low, we have Tuesday low inside of here, Monday low at the bottom there, but expecting a draw to come back down because we're already expecting lower prices. So any strength that comes in will be suspect, and and we could look at that as false, because we already know that the higher time frame wants to carry prices lower. The weekly draw still in effect. Don't take these things lighter. You see the smaller wick through the sell side. That is still a very significant moment in price to take note of. Oh, it's getting hot. And don't forget you could comment whenever you see this video. Comment and let me know how your journey going, how how your strategy going for you. If you get time to look at the standard deviation, see how where you was able to journal from it. If you saw anything that I probably missed or didn't take into consideration, you could always drop a comment and we could have a discussion about it. And because again, we're just trying to grow our understanding and knowledge with how these candles and market move, and the more we could grow in confidence, because you can't really get 100% strike rate, but what you could definitely do is growing your confidence in whatever strategy you comfortable with. Yeah, that is definitely something to always keep in mind. Whatever strategy you comfortable with and confident in, you always want to keep growing in understanding and belief in that, and don't let anybody sway you from that, because as a ex athlete and a person who look at things a lot metaphorically and look at things very psychologically, that's a strong thing in this world. And once you find something that's working for you, no matter how much other people say do this, do that, I mean, you could always hear them out, but only apply it if it really and truly is something you could see as benefiting you in the long run. You know, and I'm saying don't be the guy who nobody could talk to, but definitely hear people out, hear their opinions on thing, on stuff. But if it not serving you for what you have to do in the end, nothing is wrong if you don't apply it. Always have an opening ear, a listening ear, but not everything you hear you should just take. You know, what good for you might be good for somebody else, and what good for somebody else might be good for you. So you have a breaking structure at this swing low, being bearish, and I want to see when price trade back up into. There's something I used to do most journal as well. I used to highlight. So what I used to do, I used to go to a 5 minute chart, right? And you see when the high form that really propel price down, I look for the last low that trade up into it, and then price breakdown, and I highlight that particular low, and I used to put it in yellow, and I used to always remember it as an area where price would price would come back to it, but it should use it as like a breaker, because it's a breaker structure, right? It should use it as a breaker and repel price if our trade idea is valid, you know? So that's something I always used to do. Wait, that was the wrong one. The last low to high, that repel price. So this would be this one here. This one here. I used to do this, like here. Low, trade up, right. And I used to really take note of this area here. Classic FOMC price action. I know I study on what I could delete to make room, to make memory for the videos and stuff I had to make. Alright, pound trading in to the breaker up into the daily order block. So we're going on the dollar index. If Tuesday is not the low for the dollar index, and that means Wednesday will be low. And that low could go as low as, boy. However low you want to go, because it's FOMC. We want to see. Well, you already at this point you already know what we want to see. The favored gaps on the smaller time frames to reject price, and our next thing too. Again, when this is how price like to engineer trip people in. Still, like when it close to like a news driver that coming in later, price would do all, it wouldn't act normal, like, because typically when price already reach a resistance area and a premium, right, it like to repel quickly, and it wouldn't spend long in premium, because think of it like auction, like when you're auctioning off something, it's like going once, going twice, and then sold, right? So when something expensive, it wouldn't really have much interest in the market now, especially when prices want to go lower. So when they tripping people into buys and stuff and sells, it wouldn't want to stay at a particular area for long. And I'm really glad that I in this trade, so I could be able to illustrate more often. I mean, not more often. Illustrate how when have manipulation in the market, how it does look. You know, it, and this is a real good time to monitor it, and you just get more understanding of it when you're in the trade. Just like when I did the trade last, it was last week. Um, no, was it last week? Let me go back and check. It was, yeah, it was last week where I explained when I sell shorts at the deviation, that was when the time of day was already coming to an end. When you it, I could have just put the position and do a hypothetical, but I find like you don't get the gist, like the real psychology of the trade when you do it like that. When you're in it, even in a demo, when you're in it, because you know you're in it for a particular reason, you're in it to learn characteristics of price, and you're in it to learn a particular, a very specific thing with price now. So when you're in it like that, you pay more attention. Just like how, even though I don't need to be in it in the funding to pay attention to it, because I know the importance of the practice, but in the beginning, if you're not that serious, if you're taking your demo like Skylark, you would know early, you would know fast. And if you find you're taking it as Skylark, then that means you're not really ready now to absorb the understanding of the market, and potentially where you're getting yourself into. That is my honest opinion with it. And the faster you can come to that realization, it'll be better for you. And I just talking from my experience, really and truly. So you see price trading back up into Tuesday low. So you see the week start on a Monday. Then we see Tuesday open underneath Monday. So that means Monday was bearish because it opened lower. Was a bearish day. I mean, it had price like option price up, but it closed lower. Then we see Tuesday open. Wednesday closed above Tuesday, so that means Tuesday was pretty much a bullish day. Now we have Wednesday open, and now we trading back underneath Tuesday and Monday low and under the low for the week because we open here, and look how far prices on the bottom under now. So it's showing us that we bearish, you know. Higher prices was seek on Tuesday, but we bearish. So I can enter here. No, this will be a good entry at the breaker, and if you have we got that rejecting price, and actually I think I would enter it when I see our next green candle, simply because confluence met, and we have the draw being this gap and lower prices. So I'll enter it only on here. Only because we're FOMC later, I'm not going to enter. So I'll go short here. Should I do a 150? Damn it. Definitely not want to enter that in the funded. I don't want to have too much things I'm watching because I'm watching this. I want to make the good content here, and I don't want to focus there. I don't want to have too much things on my plate. So, and I don't think I need to have a big stop over the high Tuesday, Wednesday high. I mean, we could trade up tier 2 because we have all these equal levels. See these equal levels here, clean levels. That tends to be a very enticing draw. Very much enticing. I should have really wait until we get into the break and see if we wanted to go above. Not the break, the order block. But I digress. Only because FOMC. Only because of FOMC. And one thing I would also advise, see the charts as fun. I want to say fun. The reason why it's serious business, but the reason why I say see it as fun, because you don't want to develop how to put it. If you take it too serious, you would develop anxiety. If you think you wouldn't get anxiety, you definitely would get it. Because even in the beginning when I started, I didn't have any anxiety. I was real confident in this information, the mentor I had, and the information I was getting. And then when I started to tell people that I was doing it and again into it, I guess they started to project their because it was just random people. There's people who actually in the market as well. They started to project, I guess, what they were going through to me now, and I started to take it into consideration. Not that you know, if somebody says something, I just listening, but I'm a listener. I listen to whatever advice people tell me and all those good things, right? And I started to take things into consideration because everybody, all my friends, doing this longer than me, at least a year and a half or at least 2 years before me. So obviously I would listen and take into consideration what they're saying. And I still was like, all right, you know, your journey is not my journey. But at the same time, I have an open ear, I have a listening ear now. So things that I didn't used to look at, when they mention it, I would be like, and I started to subconsciously see it in the charts now, and I was like, hmm. So then and there, I started to say, all right, good. I need to stop. I need to keep things to myself, stick to my strengths, stick to what I understand, stick to what I confident in, and and yeah, keep it quiet. But I had to repel that mindset of getting any nerves or anxiety or anything like that. And if I could train that from now, it would benefit you a lot going forward. Trust me. That's even the sports, the athlete in my talking. Once you can train those things from early, it would help going forward tremendously. Believe that. Believe that. Alright, let me see what's going on with the dollar index on the 5 minute chart. The 5 minute chart is the 5 and the 3 minute chart to me is a good, after you enter your trade, is a good time frame to look at when you're watching price, because you gotta see a lot of things happening from our perspective, a wider perspective. And I don't know why, but I could just see FOMC sending price down to fill whatever and then ripping going up for the rest of the week. But let me just hope that this low here was the low for the week, because FOMC is manual intervention now. So you can't really gauge your strategy, your strategy and stuff good with that. But I could expect price to whip so in a range just now. If I don't see, what's the time? Going on to 9. If I don't see price breaking going down, I definitely would see it as price just being held in a range. And I'm gonna clean this cat eyes. Yeah, and that is not something I wanna. You know me, I don't like being in a range market. So I would close it with the funded, but I will keep it with the trading view. So I have a couple videos rendering to make, and today was a bad day. We suffered some losses. We did. Here we go. Back down to the first loss. We were at this amount, and now we at here. So we lost about 400 and some change. Basically, we lost the money we made back here. So I finished for the day. Classic FOMC price action, where we expect lower prices, but price going up. We have FOMC coming in I think him tomorrow in a couple of minutes at 2. So what we'll do, we'll just let price trade through. I have a video that rendering to upload right now that explain this price like here, but BC standard deviation we traded down. This was to be a buy, but again the video explained that, and we see here where it failed. This is a good example of how it failed, right? So we have 2 examples of it failing, and I mean, you could still get some pips, harvest some pips, but it's not what we look for with the deviation, because we're trying to find the high, potential high of the week. So for Euro, Tuesday high went, and today we trading up. I wouldn't be surprised if Tuesday give us the high of the week. So after the news drivers coming in, I would look, I would enter one trade, one pair, and we would just hold for TP, and then next week we would be back in depending on how we close. I wouldn't even open each chart Friday. Not even opening each chart Friday. Um, I'm just going to take my position tomorrow and let's manage it accordingly and recoup what we lost. So we had to recoup about a 400. So that's my aim, to at least get back to our profit target where we got gained so far with our equity. And from next week we'll be back on in growing it, right? So we had an example. The videos that will be posted will explain everything. This video just to show that our trade idea didn't pan out today, but so far we're doing well. We up 3% still. Let me just we 16. Yeah, we still up 3%, and we part of it. They just part of it. They just part of trading. Not a big deal. So that'll just be it for this video, and catch you guys back tomorrow.